What's up, guys? Welcome back to Roensch Capital Charts. In this video, we're going to be taking a deep dive look at Tesla stock for April 2024, trying to pull out as much possible bias that we can out of the charts, a variety of time frames, the 4-hour daily and the weekly, and then try to pull out a little bit of bias from the volume profile and all the data we can get out of the options chain. I'll also be laying out important levels that I'm going to be paying close attention to get you fully prepped for the month ahead. Listen, if you haven't done so already, please subscribe to the channel. My goal here is to hit 10K by the end of April. Greatly appreciate you jumping aboard. Let's dive in. Now, what I want to do here on Tesla is get started on the 4-hour chart. This, to me, is the quickest time frame that is still contextual looking month to month here. And you can see that my chart here is very basic. I have two indicators. The white line is that 50-period moving average. The gray line is the 200-period moving average. The only reason I have those to begin with, self-fulfilling prophecy mentality, psychology, right? They have a lot of eyeballs. And you can see here that Tesla, at least as far as the recording of this video, at this time, we find ourselves in between those two moving averages. Now, no matter what this may look like by the time you're watching this, the way I approach these month-to-month analysis videos, all the information in here will remain contextual even if the chart looks different. We can just apply it on, depending where the stock is. Bulls, a great goal for April here on Tesla stock. We currently find ourselves approximately, 5% away from that 200-period moving average here on the 4-hour. That 200 period is very slow to adjust on the 4-hour chart, so it's likely to maintain that similar downtrend, at least for the foreseeable future. A great goal here for April on Tesla is to reclaim it. We've struggled in the recent past. We tried here back in late February, early March, and failed 3-4 days in a row. A few really big power moves that I'll be looking for here throughout April is a high volume break upside through the 200 period. Any retest I'd prefer to see on low volume, and then a high volume confirmation and continuation up, claiming that 200 period as support. On top of that, through April, I would love to see that white line, that 50 period, flattening out and curling back upside. By default, getting it above the 200 would be good, but not for the sake of the crossover. Like golden crosses, death crosses, they're overhyped in my opinion. I'm really only interested in that occurring at all because that 50 period is quicker to react than the 200 period, so it can stay closer to an uptrending stock. Now, bears, specific to the 4-hour chart for you guys and bulls, this is what you guys would not want to see. Bears would love to see getting back beneath the 50 period, a downtrending not only 200 but 50 period moving average throughout the month of April here on the 4-hour chart. And any test of that white line, that 50 period out of the stock, you guys would love to see big high volume rejections, a big sample size of market participants coming in and saying, listen, we're not ready to reclaim even the 50 period yet, let alone the 200 period. Also understand here moving forward that at these points of interest, like the moving averages, and then when we get to the technical psychological levels here on future charts in a second, I won't be surprised throughout April if we see a little bit of higher volume when we're testing those levels, because we're going to see a lot of traders making decisions around those areas. It opens up some opportunity to potentially have some edge, even on a blue chip stock like Tesla, which fundamentally is a little bit harder in the short term to find edge on compared to like an intraday in-place stock. By the way, guys, if you want to take a look at the Roensch Capital Gold server, I'm alerting scalp setup alerts, swing trade setup alerts, when they come along. The scalp setups are going out every single day. In-play stock alerts, which are stocks that are demanding trader interests, like at this very moment, very quick scalping mentality on those in-play stocks. A lot of human traders, so not quite as much algorithmic activity to compete with in those names. Unusual options activity to kind of track what the whales are doing. I alert that and verify that myself. And then, of course, the Platinum One-on-One members. You can take a look at all that at the link in the pinned comment. But let's move on here to the daily chart and start taking a look at some fundamental, or more so, let's say, psychological / technical levels here on the daily. I think the daily is the best chart to do that on. We'll zoom in just a little bit here. Now, you'll notice that technical levels will very commonly become psychological levels, and psychological levels almost always, it's rare that they don't, become technical levels. So it works both ways. Now, moving through April, 177.50 to 180 has been a very prevalent channel here on Tesla in the recent past, over the last month or two. Now, that range goes back well longer than that, but it's been back in play for the last couple of months. So bulls, a great goal for April here. This would be a power move given the recent movement we've had in the stock. 2024 has been kind of a down year for the name, right? Would be a reclaim getting up above 180, retesting it to ensure confirmation, and then getting high volume bounces away from 180. That could set Tesla up for a test of the 50-day moving average here, which that's one of the most, I would say, important levels, or more so, that's one of the levels in the world that has the most eyeballs. Tesla is such a popular name, and everybody looks at the 50-day moving average on the daily chart, of course. Now, some optimistic goals, for April. Understand, we're looking at about a 9.5% move to that 50-day moving average, but we've seen crazier things out of Tesla. And back to $200 right now, it's about a 13% move. Guys, a close at the end of April above $200 a share, that's strength out of Tesla, at least in the short to midterm, which I would classify month to month as. That would be a great scenario for bulls here throughout April to start eyeing up not only a hold of 180, get us up out of that channel, okay, but a break of the 50-day, and then set us up for a break of 200. That would be beautiful. To the downside, that 166.50 to 167 region has acted as a level of interest as of late. Okay, and then even further than that, we have that 155 area, that technical level, which is slowly, again, has become a psychological level. We do have earnings coming up in April 17th, after the market closes. So, of course, in the few days leading into earnings, and then obviously earnings day itself, and then usually 2 to 3 days post-earnings, we will see earnings-influenced movement, either the anticipation of or the result. So I am, of course, going to be watching for a fundamental change off of a shocking earnings report, which, we've had a lot of as of late. So just be aware of that. Now, bears on Tesla. A hold of the bottom of that 177.50 to 180 channel, so 177.50 really. Holding that as a ceiling would be a good step as a bear. That could set you guys up for a downside test of 166.50 to 167. But I think a lot of bears really have their eyes set down toward like 150. Okay, if we look at the move that would require, from where the stock currently sits, again, it's likely different depending on when you're watching this video. That's okay. This is all still applicable. That's about a 15% downside move. So that, based on Tesla's average range, that is somewhat of a tall order potentially. It depends on the volatility we get, especially with earnings. But bears, those are really kind of the checkpoints that I would be paying attention to, as well as this 50-day continuing in an aggressive downtrend. That would be a good thing if you're a bear. Bulls, you guys want to see that thing flatten out here as quickly as possible. Ideally, it would be great to see that return back to an uptrend. Now, implied volatility here, you take a look. It's currently sitting, depending on the time frame you compare it to. If we go back to like the beginning of 2024, okay, so let me just zoom in to make that easy for you guys to follow. We go back to like the beginning of the year. Implied volatility is currently in the mid to high range compared to the last few months here. So throughout April, keep an eye on IV. The higher IV goes, the higher the potential risk of IV crush. Okay, and the lower IV goes, again, compared to your intended trade time frame, the more favorable conditions become for new options buyers to step in. Now, let's take a look at the options bias since the beginning of this year. Take a look up top. This is the put-call ratio compared to the price on Tesla since the beginning of 2024. Just so you're aware, for context, 1.0, which is, not even on the screen right now. 1.0 is way up here where my actual cursor is right now, not where the crosshair is, right? My cursor up at the very top of your screen, that's 1.0. That's an equal amount of puts and calls open interest. It's measuring open interest, so contracts that are actively out there, okay? The lower that goes, below 1, the heavier the call side bias is. I know it's a little bit confusing, but remember, it's the put-call ratio. So I'll take you through this. We started the year here at about 0.82. That's some call side bias, okay? When we got this drop in Tesla back in late January, we got a spike in put buying, okay? Or put open interest, I should really say. And that spiked that up to 0.94, which still is not even. That's still a slight call side bias, but in recent months, we've seen the open interest on calls start to take hold with even a little bit more bias, currently sitting at 0.86. Okay, so that's the bias. But what's the expected move? If you don't know what expected move is, it's a technical term. It's a legitimate term, a technical term from the options chain. It's measured based on the implied volatility being priced into each particular expiration. And if we look here at April 26, 2024, which is the last expiration in April, we have an expected move of plus or minus $24.57. Okay, so if we take a look at, let's do the daily here. All right, $24.50 approximately. At the time of this recording, at the end of April, that puts Tesla as high as $200 a share, or as low as somewhere around 151. Okay? Now understand that fundamentally, expected move does not have a directional bias. Okay? But that is the implied volatility, or the expected volatility bias, which we can then take as a factor, put it together with all the directional bias we just looked at, including the open interest in the put-call ratio, which is a directional bias. And that gives us a really well-rounded base to then go and make our own decisions off of. Now, listen, if you're somebody who's looking at that expected move in Tesla and you're like, man, by the end of April, 151 or $200 a share. And again, it's rare that they're exact, right? But that's what's being priced into the options currently. If you're looking at that and you're like, wow, I think that's kind of a wide range. Well, then you seem to have a sideways bias, and you might be a trader who looks into perhaps some iron condors or something that capitalizes on the realized volatility being less than the expected move, less than the implied volatility. But if you're somebody that's looking at this and you're like, man, I think Tesla's going to be at 130 by the end of April, or 250 by the end of April. You have a heavy directional bias with a big expectation in terms of volatility. Well, then buying contracts may be something that you would look into, since your expectation of a move is more than the market is currently pricing in terms of volatility. So you may actually benefit, assuming you're directionally correct. Now, quickly, let's just take a look at the weekly and take a look at the volume profile that we've seen. You see here that in 2024, to start the year, we had 6 weeks in a row, including the last couple of weeks of 2023. 6 weeks in a row of red. However, since then, since the end of January, the mid to late January, we've seen a lot of back and forth. There truthfully hasn't been a lot of, outlying obvious bias in the volume profile here on the weekly chart, which is where I like to do it with a month-to-month kind of mentality. There really hasn't been much directional bias in the volume profile since mid to late January. And being that the stock is, slightly down, it's essentially flat, but it is a little bit down since that heavy bias kind of ended in late January. And that being the case, you would likely see some bears with the expectation that we would have seen some bearish bias in the volume profile since then. That's actually not the case. So that's just an interesting thing to consider here as we head through April. Listen, if you got value out of this this video, this analysis here on Tesla, please subscribe to the channel. I appreciate you, and I'll see you in the next one.